Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. What we're going to be looking at today is actually a wave pattern, one of the two types of motive wave patterns, specifically an ending diagonal. Now again, I say this quite often, with respect to the wave principle, there's 5 patterns. 2 patterns, they're motive waves. That's going to be the impulse wave and the ending diagonal. And the other 3 waves are the corrective waves, zigzags, flats, and triangles. Now with respect to an ending diagonal, it is a terminating wave pattern, so it's only found in the wave 5 position or the wave C position. And here's an example of an ending diagonal on this price chart of IWM. And here it is actually labeled. Now one of the things exciting about the pattern is whenever the pattern terminates, it tends to lead to a very sharp reversal back to beyond the origin of the pattern, as you can see here in IWM. Now again, it's a very easy pattern to actually identify, and the reason why is because it has that distinct rising wedge, or in this shape, declining wedge shape to it, and that's caused by the trend lines that actually converge whenever you draw a trend line from, again, connecting the extremes of waves 2 and 4 and also waves 1 and 3. Here's another market here. This is Procter & Gamble actually, and this is the daily chart level, where it does look like we've actually seen an ending diagonal in that market as well. And again, one thing that's very important with respect to the pattern overall is that each wave of the pattern subdivides into 3 smaller waves. So wave 1, 2, 3, 4, and 5, each of those waves would subdivide into 3 smaller waves. And again, what's exciting about the pattern is it actually calls for a move back to below the origin of the pattern. So in other words, if our identification is correct here with respect to Procter & Gamble, ultimately we can look for prices to fall much, much lower here. Now also too, here's a short-term pattern on the intraday price chart. This is the E-mini. And I thought this was interesting too as well with respect to the short-term substructure. It does look like we've seen a 3-wave advance in this market, but part of the reason why I'm actually looking at this ending diagonal here, what appears to be an ending diagonal, is because it's again in the wave C position. As I said previously, ending diagonals are terminating wave patterns. Thus they can only be found in 2 specific spots: the 5th wave of an impulse move or the wave C position of an ABC structure. Now what I'll be looking for here with respect to the small ending diagonal C wave in the E-mini S&P is if we can get below, say, the extreme of wave 4 here, that I think will actually signal or confirm that the move is indeed done, in which case we can actually trade against the actual high and look for the move to continue lower back to below the, again, origin of the pattern, which would be right there. Very simple. I like the setup, the trade setups that ending diagonals provide, because these points, i.e. wave 4, the extreme here, the 5th wave, and looking, you know where you're looking for, i.e. a complete retracement back to below the origin of the pattern. Again, what it allows you to do is actually identify, say, risk-reward ratios for the position and everything else. A very, very nice pattern. But let's keep an eye on those. Again, a good example of one that actually came to a resolution, or actually, has already happened. Here's the ending diagonal in the 5th wave position. Nice sharp move to the upside. That's exactly what we want to see. Here's one in Procter & Gamble that appears to be maybe halfway through. We're still looking for further decline below 58. And here's one to keep an eye on as we move into the remainder of the day and into early